Welcome back, everybody. Are you ready to adapt to the ever-changing housing market? With rising interest rates, fluctuating inventory levels, and unexpected market shifts, staying ahead can be challenging in this housing market. Today, I'll share some exclusive insights that can not only help you navigate these changes, but also identify concerns in the Texas and especially the Florida markets. Now let's start with a broad overview of the national housing market. Over the past year, we've seen significant changes. Interest rates have climbed, impacting affordability and the loan costs, and at the same time, certain regions are experiencing a surge in inventory while others are becoming tighter. And understanding these dynamics is crucial for spotting both risks and opportunities. These stats are astounding. According to REDFIN, 2 in 5 homeowners don't even think they could afford to buy their home today. Home prices have shot to all-time highs during the pandemic as more people work from home, and we've had those low historical rates along with a very short supply of homes and a strong labor market. Now, here's an example of the changes in pricing. Now, I'm going to take, for instance, a median home price of $420,000 and the house payment at a 7.1% mortgage rate. Now, this is assuming a 30-year fixed rate is around $2,864 a month. But let's go back to 2019. That same home price at 4%, the monthly payment would be $2,210. That's about $650 less on that expense payment for that very same property, which is just crazy to think. Now, as a real estate agent and an investor out here in the Denver area, it's been a crazy few years. All my projects rise in value as I work on them. And my home sellers, their home prices have skyrocketed from when they first purchased those homes. Now, so far, people are still paying those high prices, but still, it's due to that little inventory that we have. And on the other hand, a lot of sellers want to just stay put on those low rates. And also the home buyers, more and more, are sitting on the sidelines as they just are being priced out of this crazy housing market. Now, the rents stay stable, and I own rental properties as well, and all my properties are currently occupied, and any time that they do come vacant, I get them rented within days, as still many people are opting to rent just to wait and see what happens to the home prices for them to purchase. Let's look at what Housing Wire reports along with Redfin. They go on to say that the key housing markets are starting to buck the current trends. Now let's look at those markets like Texas and Florida. If you were thinking of investing there, they have experienced outsized growth in demand, and I stress now showing signs of a pullback. Now, the interesting statistic here is among the 10 U.S. metro areas with the largest annualized increase in listings in March, 6 were in Florida and 2 were in Texas. Now, one thing to consider in Florida is that out-of-state buyers, they don't see Florida as such an amazing deal anymore. In fact, the rising rates of the homeowners insurance in the area, and again, according to Redfin, soared by, get this, 43%. And this is playing a part in the affordability of homes in the area. And now people are having to look in states like North Carolina or Tennessee just to get the good deals right now. So one thing on all this, if you're looking to invest in those areas, especially Florida, please make sure that you do your extra due diligence on these type of things, especially now with the homeowners insurance increases. Now let's take a look at existing sales in March 2024. Existing home sales means a completed transaction that includes single-family homes, townhomes, condos, and according to the National Association of Realtors, the existing homes fell 4.3% from February to a seasonally adjusted annual rate of 4.19 million in March. Year over year, home sales won 3.7%, down from 4.35 million in March 2023. Now, Chief Economist Lawrence Yun said, quote, "Rebuilding from cyclical low home sales are stuck because interest rates have not made any major moves." And Yun also goes on to say, there are nearly 6 million more jobs now compared to pre-COVID highs, which suggests more aspiring homebuyers exist in the market. Now, according to NAR, total inventory registered at the end of March was 1.11 million units, up 4.7% from February and 14.4% from a year ago. And unsold inventory sits at 3.2 months supply, up from 2.9 months in February and 2.7 months in March 2023. Now, with all this inventory, we are seeing between the flips selling here in the Denver area or just regular listings for my sellers, we are still seeing multiple offer scenarios, and the home prices are still, and I stress still, on the rise. So what do the future economic forecasts look like? Well, NAR forecasts existing home sales to rise to 4.46 million from 4.409 million in 2023 and another to 5.05 million. Yun goes on to say, and I quote, "Home sales have lingered at 30-year lows since 70 million more Americans live in the country now compared to 3 decades ago. It's inevitable that sales will rise in years, and inventory will grow steadily from more home construction, and various life-changing events will require people to trade up, trade down, or move to another location." Now, according to Housing Wire, we have had back-to-back weeks of housing inventory growth, and that spring 2024 is much healthier than last year. You might be asking, if there is a little more inventory, then why are prices still rising like they are? Well, the key answer to home prices tapering off is the Fed's policy on inflation. And with the inflation numbers reported in March, the hopes of any rate cut this year might have dwindled even more. So this will have an interesting impact on just what happens to the home prices going further into the year, and maybe leave me some of your comments down below on what you feel home prices are going to do in the coming months due to the interest rates not being cut as once speculated. Chin Zaho from REDFIN goes on to say, quote, "For home buyers, the latest CPI report means mortgage rates will stay higher for longer because it makes the Fed unlikely to cut those interest rates in the next few months. And also, housing costs are likely to continue going up for the near future, but persistently, high mortgage rates and rising supply could cool home price growth by the end of the year, taking some pressure off the cost." And again, with so much going on in the housing market, where do we go from here? With all these existing homeowners locked into historical low rates, contributing to the shortage of homes, the situation is very critical to first-time home buyers who don't have that huge amount of equity to roll over to a new home from the sale of a previous home. Now, in fact, REDFIN found that 40% of U.S. renters, they don't believe they'll ever own a home, and that's up from 27% last year. And the Gen Zers and millennials who are expected to buy homes, more than a third, or 36%, expect to use a cash gift from a family member to contribute to their transaction. Now, as a real estate investor, you can sure see the demand to still continue to get out there, fix those homes up, and get them on the market, or also hold them as a rental property. But again, we have to always exercise caution as well, especially in the different markets that you all might be in. But around in my area, things are still in high demand. And as you can see, We're all up against a lot of hurdles right now, so it's more important than ever to buy those homes right. There's opportunities in any market, but you got to stay informed and keep up with what's going on in the grand scheme of things. I hope this information was helpful, and as usual, if you'd like to reach out anytime, talk to me about a deal you may have, partner up on a deal, or anything real estate related question, my contact link is down below. And until next time, get out there and make some deals.